Everyone's talking about, the war templating onto 2013, 2017, and I think we have to be aware of the different, the different participants we have, and the big one, of course, which we all know, is institutions. And so we have to account for that, and I think that's what we're seeing right now. Institutions as a menagerie. You've got the Michael Saylors and the Teslas, which are corporate treasuries that are stacking, but then you've got, the Ruffers of this world. They're really macro funds that are using Bitcoin as part of their portfolio, and they're going to take profits, so they rebalance so they could hold the rest without a lot of backlash from their investors, because it's free now. And we've just run into this March period, end of quarter, and you can see the steep drop as we approach into it. So my guess, looking at that, is that we've got this end of quarter rebalancing, bearing in mind if they got in from the last quarter, they've done effectively a 6x, a 3x to a 6x, depending on where you entered. And so if you're a macro fund, you probably want to rebalance. You probably have directives to rebalance because you don't want to contain, their directives is to mitigate risk. So they will probably have to sell their winners to buy more losers. And you see that with the whale balances, that is definitely dropping. But you see the next tier down, the dolphins and the sharks, which is 100 to 1,000 bitcoins in their wallets. That's growing to take it up. And so if you sum the two together, you get this chart, and it shows that this entire cohort, whether they're whales becoming dolphins or sharks or whatever, and the guys underneath them, overall there's an accumulation, and that is still continuing to climb. Anyone holding 100 to 10,000 bitcoins, that cohort, they're, as a group, continuing to add to their Bitcoin. And typically, and I don't know if I can continue to template this, but in the last two bull cycles, this cohort started to sell down by the middle of the main bull run, and they're not selling down yet. So if it holds true this time, yet to see, then we're not halfway yet, which kind of makes sense. It's only the first quarter of the bull year that we have. One every 4 years is a bull year. We only really have a really hard 1 year of bear market. And then we start the bull phase. We typically have 3 years of bullishness to 1 year of bearishness. But then you got the first part of the bull run is the accumulation bottom, which can last 6 months, 3 months, even 9 months. Then you have the early phase, which is it sort of pumps up, gets everyone excited, and then that sort of dies down a bit. And then there's a reaccumulation, and then you have the real bull what I call the main bull phase, which is it's usually played out in 1 year. 2017 was the last one. 2013 was the one before that. 2021 is the main bull phase of the bull market. So that final explosive bull run, the 1 year out of the 3 years of bullishness is happening now, like the crazy bullishness where. So I'm in that nice place where I don't have to be right or wrong, just the model has to be right, and it keeps changing trajectory upwards. So it was sort of ballparking 200 to 300,000 if you assume the end is in December. And now it looks like 300 minimum is the trajectory. So, they can go further up, or it can go down a bit if we have. It just depends on how the price action swings over the rest of this year. I'm navigating this quarter by quarter. I'm aware that we may have a super cycle. I have no strong opinions about it. It's possible. But, there's a lot of leverage in the system, so we could crash down a lot as well, I think. So I'm not going to scale out like you see those dolphins and whales doing. That's a pattern of I think very wealthy participants that aren't trying to time the markets, they look very, wise. Investors that don't play too much of the timing game, and they scale out. You can see that. Anyone with 100 Bitcoins or above, they're tending to scale out 6 months before the top because they don't know exactly when it is. I'm planning to start to look at that around within 3 months of the top. I'll start to have a closer look at it. The last few weeks to the top is just ridiculously fast. Like, what was it? Did we go? Do you remember, Peter? It was it 2 weeks from $10,000 to $20,000? So my strategy last time was actually not to sell. I was not to sell in leading up to the top. It was more that I would wait for the top to start to signal, and then I would sell on the downward run. If you're a whale, and maybe a Michael Saylor size whale, like maybe you've got maybe not even 100,000 Bitcoins, but maybe you've got just a paltry 10,000 Bitcoins, you might have trouble selling in the downside of the market because the liquidity starts to dry up on the way down. But for ordinary people that have got under, say, 1,000 Bitcoins, I think it's perfectly fine. There's sufficient liquidity in Bitcoin to exit the market on the way down. You could even hedge your way out by selling the short instruments and then dumping the rest on spot markets. And so you could, the futures markets are always going to be like something like 5 times to 10 times more liquid than the spot market. So you can actually hedge out before you actually get the sale on the underlying if you've got a lot of Bitcoins. So essentially using the futures market for what it was designed for, the future, right? I'm gonna if I've got say 100 Bitcoins to sell, maybe I would just sell 100 short contracts on Bitcoin right now. Say Bitcoin's at $300,000, I'll sell 100 short contracts, 100 Bitcoins, and that'll fill almost within minutes. Okay, and so you've essentially locked in the price, a sell price of your Bitcoins for the future. And so if the price starts to drop away on you, it doesn't matter, because like say you're selling, say it's dropped down to 250,000. You can still sell your real Bitcoin on, say, Kraken or Gemini or Coinbase at 250,000, and great, you didn't sell at 300,000, you sold at 250, but your short contract, which you sold at 300, is now going to make up the difference for that $50,000 that you didn't quite get at the 300 mark. So as the price drops away, you've already locked in the price. So whatever you sell it at, that short contract will make up the difference. So once you've sold the underlying, then you can exit that short contract.